Symbolically, Wall Street is all the banks, hedge funds, and security traders that drive the American financial system. Geographically, Wall Street is the center of Manhattan's financial district. It is also where the New York Exchange is located. In addition, Wall Street created the two biggest financial crises in the United States, the Great Depression of 1929 and the Great Recession of 2008. Um, Wall Street includes the stock market, bond market, commodities market, futures market, and the foreign exchange market. For our purposes today, we're just going to focus on the stock market.
Okay, so I'm going to be talking about how the stock market works. So first, the company goes to market and people buy its stocks. So then demand for the stocks rises. Their value also rises, which also makes the market value go up. Next, if the market is expected to go down, investors get nervous and sell. And as a result, the demand, the market value, and investors' money goes down. So there's someone called the stockbroker who connects the buyer and the seller. And in modern society, it's usually like an investing app. And there's something called the primary market where you buy your shares, and the secondary market where you sell them. And if someone wants to buy a share of a company, they don't buy it from an actual company, but they buy it from a person who previously got the stock instead, and the other way around. And when investing, you get a portion of the company's profits. So if the company succeeds, you can sell your shares and gain profit for that yourself. So how exactly do you make money? So the stock market almost completely depends on supply and demand. So if more people want a product, its stocks become more valuable. The main idea is to buy shares for as low of a price as possible and sell them for the highest price possible, so you get the most profit. So for Jason, that meant buying his shares in the cotton market for a low price and selling them for the highest possible price. In the middle of the chapter, he receives a telegram from one of his helpers that informs him of the lowering prices of his shares. So that explains why he's upset, because he can't sell his shares for the highest price that he wanted to earlier. So there are a couple of risks involved when investing in a company. For example, in a large company, there are always natural market fluctuations. There's always risk of inflation and like changes in the country, like the coronavirus right now is affecting the economy and bringing the stocks down because the factories are closing down and many already been working. Also, new laws are a potential threat to every company, and they could also affect its market and stock values. More risks include like investors might want to just sell shares for their personal reasons. There could be changes in leadership in a company. The price of materials and price of production could also vary. But for Jason, the main risk was how long it took for him to get the telegram of the market fluctuations. Like if he gets it too late, he can't sell his shares and thus can lose money when he sells his shares. So here's just a graph that illustrates that. So you can see like the higher the risk you take, the higher the chance of a greater return you have. So the more you invest, the more you have the potential of gaining. And this also applies to Jason because he takes about $50,000 in today's currency from what Caddy has been sending them and investing it into the cotton market. Um, and since he invests most of it, he kind of expects a huge return, which is again why he's so upset because the market isn't doing so well.
Insider trading is the illegal practice of trading on the stock exchange to one's own advantage through having access to confidential information. So, for example, if Sam Q tells you that Apple Music is going to shut down tomorrow, and you sell out the stocks before the media releases the official information about the closure, and you avoid losing a lot of money compared to everyone else that has Apple stock, um, that's called insider trading because you already have that confidential information. And right now there is a stock market plunge because of the coronavirus. So the Federal Reserve took the highly unusual step of injecting more money into the bond market last week to ensure the financial system remains stable. The New York Fed will pump $1.5 trillion into the short-term lending markets, and a U.S. economic recession will lead to a global recession. So we just have to wait and see if the virus is going to go away anytime, and how the stock market is going to be changed by that. So there's going to be frantic sell-off during an economic recession. Stockholders will try to sell all their stock in economic recession to prevent more losses. That leads to more market failures as the stock prices plunges more. So the Dow Jones Industrial Average, also just called the Dow, is a stock market index that measures the stock performance of 30 large companies listed on stock exchange in the United States. Their stock fell down 10% last week, and it's the worst single-day crash in 33 years. The stock plunged by more than 1,400 points, and they officially entered bear market. So in the book, there are multiple ways that Jason makes money. So first, he has stocks in the cotton market, but we'll talk more about this, but he actually loses a lot of money in that investment. He also takes Caddy's money and presents that as his salaries, and he gives Mother the void checks to burn. He uses Mother's $1,000 to buy a car. He works for Earl in a farm supply store and keeps that salary to himself. He also gets money from Caddy whenever he sneaks Quentin out to let Caddy see her.
I says my people owned slaves here when you all were running little shirt tails, country stores, and farming land no boomer would look at on shares. This quote shows like the decline of the Compson family and how they used to have honor and pride and that now they don't.
The Jason chapter takes place in 1928, and that's a year before the really big stock market crash and the Great Depression. During the Great Depression, the price of cotton dropped 18% in 1 week, and it went from 16 cents per pound to 9.5 cents per pound. And so because Jason has stocks in the cotton market, this decline is really going to affect him, and he's going to lose a lot of money. Of course, we don't see that yet because, the book isn't written in 1928 or 1929. But we can kind of see it foreshadowed because Jason is losing money already. On page 243, Jason says that it had closed at 20.21, 40 points down. So he's already losing money, and this is before the stock market crash, so he's gonna lose a lot more.
Right, it's a sucker game, unless a man gets inside information from somebody that knows what's going on. That would be insider trading that we talked about previously. I happen to be associated with some people who are right there on the ground. They have one of the biggest manipulators in New York for an advisor. Way I do it, I never risk much time. It's the fellow that thinks he knows it all and is trying to make a killing with $3 that they're laying for. That's why they're in the business. So in this quote, we can see that Jason pays people in New York for advisory. They basically tell him when to buy stock and when to sell stock. but that's not really insider trading, so it's still legal. And here we see that he's very confident about the stock market and his investments because those people in New York can help him, supposedly.
I don't see how a city no bigger than New York can hold enough people to take the money away from us country suckers. Work like hell all day, every day, send them your money, and get a little piece of paper back, your account closed at 20.62. And if that wasn't enough, paying $10 a month to somebody to tell you how to lose it fast, that either don't know anything about it or is in cahoots with the telegraph company. I just want my money back that these damn Jews have gotten with all their guaranteed inside dope. Then I'm through. So Jason pays $10 an hour to a Jew in New York to get inside information on the stock market. So the people in New York would tell him like when to buy and sell stocks to like guarantee like maximum profits. So he goes to the post office a lot to see if he's gotten a letter from them. And when his account gets closed, he's really angry that city folk have more current information. Because Jason has a higher social status than them, so he thinks it's unfair that they have an advantage. Jason uses the stock market to maintain his public image, especially because investing is really common. It's a really common practice, and so Jason could be trying to conform to society, and also, he puts a lot of value on money. Money is really important to him, and the stock market is a good place to gain money. It's also a really good place to lose money, but Jason feels confident enough to take that chance with the stock market, and that kind of shows his power, because he doesn't really feel like he has that much to lose. So the difference between owning stock and owning land is basically just the market, because in both the stock market and in land ownership, you buy something and hope to sell it for a higher price. The goal is to make a profit. For land ownership, you have a little more control over the value of your good, because you can control how it looks, that kind of thing. Whereas the stock market, you don't really have that kind of control. Land ownership can also garner more respect because the wealth is more visible.